just to give you a little bit of background with regard to Mary, just go to the next one. So Mary joined us in 2012. She is responsible for our Asian business. She's a PhD in economics and MBA from Harvard. She worked for the Soros Group in New York. Then she's worked for Oaktree, and she's lived in Asia, lived in Singapore, and she's been involved in investing in Asia since the late 90s. And she is one of the most talented people I've ever come across, and I commend her to you as highly as possible. And on that note, I'll pass it over to her.
So we've identified 4 very important thematics that we think are driving Asian equity markets over the medium term. So I'll just run through these quickly, and then there's some more details on the following slide. So the first one is Asia's demographic barbell. The companies that are in the colored boxes in your presentations, those are the companies in the portfolio that we use to invest in this thematic. The second is structural reform in India. The third is m-commerce in Asia. And the fourth is capital market liberalization in China. So if you flip over, the first one is Asia's demographic barbell. You may be asking, what does that mean? So a lot of people think of Asia as being one homogeneous region, but from a demographic perspective, it's actually 2 very distinct different regions. One is North Asia, so that's China, Korea, Taiwan, and Japan. And these countries are characterized by very large aging population. The societies are largely already urbanized, and they've had low birth rates for a long time. So the population pyramids have ended up looking like this. So you have lots of old people at the top and not very many young people at the bottom. ASEAN and India, on the other hand, are completely the opposite. Their population pyramids look more like a population diamond. So it's like that, and you have very few old people at the top. Birth rates have been falling for a while now, so there's fewer younger people, or like very young people, but there's a big, massive part in the middle of, young, working age population, and these are really driving consumption habits in these countries. So when we construct our consumer and to a lesser extent financials portfolios in those sectors, we look at, what are these different demographics going to need? So in North Asia, the aging population needs healthcare, they need insurance, they want luxury, and they want financial services that are, focused around wealth management and more sophisticated products. Whereas in ASEAN and India, that big working class population, they want consumer staples, consumer discretionary, autos, and introductory financial services like personal loans or first ever credit card or introductory mortgage. So that's the Asia's demographic barbell, and there are many different stocks via which you can play that in Asia. The second one is structural reform in India. So as you know, in 2014, Prime Minister Modi was elected in India, and there was a lot of euphoria around the initial election. And since then, Modi has actually done a good job of sort of tempering the euphoria and putting in place very important long-term structural building blocks that are going to drive India over the medium term. So, for example, these include increased infrastructure spending, efforts to attract FDI into core sectors, implementation of a GST, which has very big implications for the consumer sector, among other things, and then a program called Housing for All by 2022. There's also a Make in India campaign, which for those of you who watch CNBC during the day, you may have seen these ads. They're like every third ad on CNBC. And he's really trying to make India an exporting powerhouse in addition to a strong domestic demand story. So the structural change in India is a very powerful thematic, but the thing that we really like about it is at the same time as there's a structural reform going on, there's a very powerful cyclical upswing starting to occur in India. So Modi, to be honest, really lucked out because he came into power and then oil prices fell dramatically, and India is a net oil importer. And the importation of oil has implications for inflation in India, and inflation at the same time had a step change down. So while he's trying to put in place these structural blocks, India is now in a position where they can cut interest rates quite aggressively, and this is going to lead to a cyclical upswing at the same time that the structural reform is going on. So when I meet with central banks throughout Asia, typically they think maybe 25 basis point cut, maybe 50 if the world gets a bit wobbly. India, on the other hand, they're expecting 200 to 250 basis points of interest rate cuts over the next cycle. So that's a huge, powerful driver of potential cyclical upswing in India. So that's one of the countries that we're extremely excited about. And then the third thematic, flipping over to slide 15, is m-commerce in Asia. So m-commerce is simply e-commerce on your mobile. And you may ask, well, e-commerce and m-commerce is important all around the world. Why is this particularly important in Asia? So remember maybe a decade or two ago, and there was the whole thematic of leapfrogging. So it was people in developing countries didn't have any phone, and they skipped the whole landline stage and went straight to mobile. A similar thing is happening now with e-commerce. So there's countries where the physical retail infrastructure is not that well built out, and in our view, it may actually never get that well built out. People may go straight from having limited retail infrastructure to using e-commerce as their primary means of purchasing things. So for example, over 500 million people already shop online throughout Asia, and many of those do so via their mobile phones. Just using China as one example, because it's probably the most developed on the m-commerce thematic. Currently, online sales are growing at 30% a year, versus offline retail sales or total retail sales, which are growing at 10% a year. To put that in Australian context, May retail sales in Australia were 0.3%. So these are absolutely enormous growth differentials. And this transformational change, it doesn't just have implications for the actual e-commerce companies that we can invest in. These would be names that you've all heard, maybe have heard about, VIP Shop or Jumei, Alibaba, these big, global or, listed in the U.S. e-commerce companies. It also has implications for a whole subsector of companies that support this thematic. So one good example would be logistics. You can imagine if tier 3 and 4 cities in China don't build out that retail infrastructure, people shop primarily on their phones, you're going to need a very big logistics sector and distribution to make sure that those goods can actually get to the people. So one stock we like in this context is Haier Electronics, and it has its own very profitable white goods business, but it also has a huge distribution network, and Alibaba last year took a stake in the company and partnered with them to be their large goods distribution partner throughout China. So these are the kind of companies we look at to invest in this thematic outside the sort of obvious ones. And then lastly, within m-commerce, there's also going to be a lot of losers from this. So, mall companies or companies that are very heavily invested in their own real estate, certain companies that can't keep up in terms of the technology and the telecommunications required to support this thematic. Those are the kind of companies that we avoid. So there's lots of opportunities in the m-commerce thematic. And then lastly, this is very topical given what's been going on in markets for the last few days, but capital market liberalization in China. So this is a very long-term holistic goal that the government wants to achieve. Capital market liberalization is just one part. So they want China to become a major player in the global economy, and that's going to have to include certain structural changes like floating the RMB at some point, opening up the capital account, and opening up the capital markets. So last year they started a pilot program, which is very small, but allowed Chinese domestic investors to invest in Hong Kong, and conversely for international investors and Hong Kong-based investors to be able to invest more easily in China. So it's called the through train, and it goes back and forth, southbound and northbound. So China's been a very volatile market recently, as Ashok pointed out at the beginning, but we think that over the very long term, this theme is going to play out, and there's going to be opportunities in both China and in Hong Kong in order to take advantage of this.